In today's session of Visual JForex, we will be taking a look at the indicator named TDS, that is the Tom DeMark Sequential. This is the second part of the Tom DeMark indicator series. In yesterday's session, we saw the TED, Tom DeMark indicator, and now today is the turn of the sequential. This is included under the other classification of all these indicators. We will see how we can utilize these indicators to design and develop the algorithmic setup using the Visual JForex board, which has been developed by the Dukascopy Bank SA to make the experience of creating, designing, and developing the algorithmic setups not easier. All we have to do is take the appropriate indicator, devise the optimum setup which is more likely to prove profitable, and then keep it running on the bank server. We don't even need to be in front of the system day in day out. The job will be done, and that's why this is more beneficial to trade using the algorithms, automated algorithms. So we will see how we can utilize this indicator. First thing, we have to customize this indicator, and to do that we need to be aware of how this indicator works. These are four parameters depending on which we will be getting the two output parameters, two output values, which then can be utilized to set the conditions which will be necessary before the execution of the trade. We will also see how this indicator works on the chart so that you feel more familiar with the functioning of the indicator. This is the Euro USD chart on the 5 minute. Let me add the TDS Tom DeMark sequential. So here it is. This is fairly easy to understand. We basically look at the closing value of the current candle or the last candle and then compare it to the candle which has closed 4 periods back. That means we will be taking the bunch of 4 candles and we will be comparing the latest candle with the last candle, that is the fourth candle. So we compare the values, closing values of the first and the fourth candle, and depending on the closing levels we see if it is time to go for the buy trade or the sell trade. So if we see that the underlying momentum has been in the negative territory where the first candle has been closing below the fourth candle for successive time periods. So we take a bunch of candles and we compare the first candle to the fourth candle, and we carry out this process for last closing candles, all the recent closed candles, and we compare. And if we see that the closing value has been less than the prior candle's value, then that means the underlying momentum is on the negative side, and as per the sequential setup we need at least 9 subsequent closing levels which are pointing to the negative territory, and then after that if the momentum turns and now if we get the closing value which is higher than the prior closing value, then that means the momentum is now shifting to the buy side from the bearish territory. So this is the time to look for the buy trade, and vice versa for the sell trade. If the consecutive candles have been closing higher and higher for quite a considerable time, more than the 9 time periods, and then if we see the closing value diving below the fourth candle's closing value, that means the turnaround in momentum, and then we look for the sell trade. So this is the basic idea behind the setup, and we can utilize this design to find the trading opportunities, and as is the founders belief, this setup is likely to prove quite profitable, and to make sure that it is, we will first need to do the lot of testing. We will have to devise the setup using the indicators block and then test it on the historical data to see its efficacy, and only then we will be able to rely on the algorithmic setup. So this is fairly easy to develop. We don't have to use too much complexity here. All we have to do is compare the closing values and closing values of the candlesticks, and then depending on those comparison, we can then rely and see if it's time to take new trade. So here, coming to the indicator block, the TDS, first thing we have to define is the underlying instrument. If we want to work with the Euro USD, we keep as it is. If you want to change the underlying instrument and work with another currency or CFD pair, then see you have to choose that particular instrument from this list provided to you, and then we can design the algorithm for that particular pair. For today's session, we will keep the Euro USD as it is, and I think then we will move on to the appropriate time period for the each candle. Now, as I have said in many sessions, that the time period should be chosen as per the time horizon. If you want to trade on the lower time horizon, then the shorter time frames like 5 minutes, 10 minutes, 15 minutes, or even half an hour are good enough. If you want to go for the swing trading opportunities, then the longer time frames like hourly, 4 hourly, or even daily will do the job. So this time around also the same logic prevails, and we have to see what is our time horizon. If we are trading on the intraday basis, then the lower time frame would be sufficient, and if we want to trade for multiple trading sessions, then I think the longer time duration will be helpful. So for today's session, we keep hourly as our time period for the candle. Shift is the look back period. If you want to access the current candle's data, then you keep the shift at 0. If you want to go back in time, then the look back period should be chosen appropriately, and you will be able to retrieve the historical data and see how the momentum was at that point in time, and depending on that data, you can draw your conclusion and go for the fresh trading opportunities if you feel the time is right. Now here, this is the time period, that is the number of candles which will be compared, and it has been set at the 4, and this is the logic of its developer also. So we don't really tinker with this setting, but if you want to experiment and if you want to do the comparison between the, for example, say first and the sixth candle, then you will have to choose 6 as your time period, that is the number of candles for the comparison, and then the system will work accordingly. So this option is there, and I would say that you should experiment it and see if it works, and if it works better than the default value of the 4, then well, you can use that combination also. So there is nothing stopping you from changing that parameter also. And for this indicator, the applied price doesn't really make much change, as we use the closing value of each candle regardless of the applied price. But the only thing is that there will always be some difference because of the difference between the bid and ask on account of spread. So we have to be mindful while doing the comparison to make sure that both the values are on the same side, either on the ask side or on the bid side. And one more thing is that you can also utilize this indicator to make the algorithms in conjunction with other indicators to increase the profitability. Suppose if you don't really want to go for the contra trend trades, even if on the lower time frames the momentum has now shifted in the opposite direction, but you are also keeping in mind the larger time horizon, and there the momentum is still on the earlier side. If suppose for example the longer time frame momentum is on the buy side, and if on the shorter time horizon, if the underlying candle is entering in the correction phase, then in such instances you can avoid taking any positioning if you use the multi-time frame setup, and you utilize other indicators also to set those conditions. So this setup is good enough, and it gives you instant idea of the change in momentum, and that's why it is preferred by many traders. But as I said, nothing is like foolproof, and even this indicator setup will also develop false trading signals, and to avoid the losses, to make sure that the losses are minimized, we have to know what is the best possible implementation of these indicator, and then devise and design the algorithmic setup accordingly. Coming back to the indicator block, we get these output values. Either you will have the positive value or the negative value, as these indicators calculation is simply dependent on the difference between two candlesticks closing values. So if, say for example, the first candle has closed below the fourth candle's value, then we simply subtract the fourth candle's value from the first candle's value, and the difference will be negative. That means the negative output will be giving you the idea that the territory in which the underlying instrument is trading is on the bearish side, and it's good for the sell side trade. And at one point in time, only positive or negative value will be available. Suppose if in the negative territory, the underlying instrument is in the sell territory, and in such instances only negative value will be generated, whereas the positive value will be blank. But as and when the momentum shifts on the buy side, and we see the first candle's closing value inching higher than the fourth candle's closing value, in such instances the difference will turn positive, and we will have the positive output value, whereas there will be nothing in the negative territory value. So we can use these two output values to set the conditions, and as I said, only one output value will be available at one point in time. You can simply do the comparison in what territory the output value is available. You can set the if conditions, and depending on the outcome of these two values, we will be in position to take the trades, and see if the probability of the trade is higher or not. So historical data, historical testing will also give you a good idea of your algorithms proficiency, and the probability. So that's it from my side for today's session. If any of you have any idea to share or feedback to give, you can write in the comment section, and I would be more than happy to take the discussion forward. Thank you all for joining in. Goodbye.